Good morning, everybody. Good morning. All right, let's check everything out. So I know oil's up a ton because the ceasefire was canceled. So just give me 1 second. I just want to mark out this 20 ma. Because even though I am short oil right now, I am somewhat tempted to take a long position at this point, just to kind of hedge against everything. I do have the portfolio almost back to full. Still needs a little work, but it's getting back to that point. Good morning, everybody. So I might take a long call on USO just to kind of hedge against the puts. And then whenever we get a ceasefire again, or if we decide to basically turn Iran into a glass factory, um, then I'll take more puts. But I'm going to keep the current puts. Now I want to look at ACN really quick, because I do have a very large position going on here. So that looks like bullish structure. Could be an inverse cup, but we will see how that plays out throughout the day. American Airlines. My puts on these are going to do very well today. Albertsons looks good. I do have HIMS puts going, so those should be doing very nicely this morning. Let's see, WTI. I do have some puts on WTI, which, oddly enough, this does fit the context of what we were looking for. Just to see that right shoulder. Now, let me check out SPY. Now, one thing I wanted to talk about, which I did kind of post on Webull last night, but I know not everybody reads those posts, is that we have a really important resistance line at the top here at this 758.45. And each time buyers have been trying to basically hit that trend, they have failed each and every time. And each time we see that failure happen, it leads to lower lows and lower highs, which is really starting to make me think that the market's getting very close to having a pretty major fall. And the reason why we would have that fall is because we would basically just be heading back to a range where buyers did feel really good, where buying in did create results. Now, buying in at these previous ranges, and can't really do a sideways square, so we'll just do a trend line here. But buying at this white range or below, basically, where buyers have stepped in, yes, it yields results, but it hasn't been very quality results in terms of trying to set new highs. It's just been failures each and every time. Which is not ideal if you're a buyer. Um, Even though many of us are trading options, this price action is moved by equities. And if you're trying to buy at that level and it continues to fail, then where is that taking you? Well, that's taking you to this area where support really did pay off. Um, again, this support took us all the way from the 706 to the 758, giving us an all-time high. So buyers might see the incentive to say, okay, let's just go ahead and wait until we get back to this area. Because very likely that will create the incentive to push that all-time high and give us the liquidity for that. So this is a daily time frame, but this is just kind of a thought that is ruminating within me, I guess. But besides that, let's check out the 5-minute chart. By the 5-minute chart, I mean the 30-minute chart. And one thing we do have to establish is that this cup never closed here. Okay, this cup hit a high and basically has not closed, which is not a good sign for bulls either, because as much as this looks like starting to form that cup and handle, we can't really consider it that. We see plenty of bearish structure starting to form here. Have hit this previous support. Now, this support can lead to a small bounce. Again, we just have to look towards previous ranges that we traded down. Let's just go back all the way. So the support has been hit 3 times now. Each time this support is hit, it generally weakens. As you can see, this third hit of this range, we actually pushed underneath it slightly, which is very likely alluding to we're going to end up breaking through that support. So we have 2.5 minutes until market opens. I just want to mark out some of these prior support areas. Now, if we do break through this support, which is, looking fairly likely, then the next range will be that 732. So that's on the hourly. On the 5-minute time frame, we do potentially have this head and shoulders starting to form as well. We do see the ADL heading upward. So I do want to see how the VVIX is opening today. I do want to see where the HIG is opening because that's going to be very indicative of what's to come. And I do want to see bearish structure forming. I don't want to just short just because we're at the upper Bollinger or whatever today. Now currently we're not at the upper Bollinger and the market opens in 35 seconds. So unless we get a nice push up into the upper Bollinger, I won't be trying to target shorts into this just yet, or calls. I just kind of want to take things slow and steady today. I still have the challenge going, yes, and good morning everybody. Um, Currently I'm at 4,900, closing back up towards that 5,000 range. Now I will be pulling down a little bit very likely because ACN is pulling down. That's a very, very large position in my account right now. So until that pulls back up, I will be down a little bit. Very large potential selling candle there. HIG is down to 79.62. Just for reference, yesterday it was at the 79.80 something. So that is quite a pull down. Now I want to look to see what the 114 calls on USO are looking like price-wise right now. They are actually fairly cheap. So I do think I want to take a couple of them. The mid price is looking like 145 or 141, excuse me. So let's see if we can get one for 135. And let me go back to the SPY here. Okay. Oh, I thought those got filled. Have not filled yet. Okay, they got filled at 141. So I took 2 USO calls for the 114 strike, just because that is where the daily 20 mile is, so it should definitely hit that range. Now for SPY here, we'll see our volatility updated in a few seconds. Seeing a lot of share buying into the HIG, but I don't think that's going to last, but we'll see. ECN is pulling back up, so those calls that I have going should regain weight today. Let's check the 1 minute time frame here. These are just for this Friday. So I'm not looking for anything crazy. Just for this Friday, I just want to absorb as much of the short-term weight as possible. ACN is still dumping down a little bit, so that's not good. I think I need to update my futures premium, so give me 1 second. Give me 1 second. So may not update on my Webull yet, but we'll see. Should start updating it. There we go. So it's at 91.26. Was all the way up at 91.83. So volatility pulling down a little bit. Now again, today we do have the FOMC meeting minutes, so that's going to be probably fairly impactful on the market. Again, the Fed's kind of shifted from a stance of pushing out the information and data towards us and allowing us to absorb it, where they're more so absorbing what we do. So reading those FOMC minutes is actually going to start being really important again. Yes, I do have calls on ACN. The calls I have on USO are the 114 strike for this Friday. So I'm essentially just looking for this move up to the daily 20 MA. And we are starting to build the structure for it. This is the 5-minute time frame, so it doesn't hold a whole ton of weight. But we are starting to see the nice inverse head and shoulders filling out. So I am expecting that to head to the upside. The HIG is still buying a little bit. Again, it was at 79.62. It's currently at 79.66. Now, unless we see a really clear short opportunity, today is the type of day where I'd rather it just pull down, start heading back up, create that shoulder, and then short into wherever we're going to head towards the low of the day. The reason why I'm not going to be shorting yet is just because we can see some chop and we don't fully have this bearish structure filled out. So as much as the market is bearish, we can still head upward, form a little cup, form a handle, and go from there. We're starting to see buying within semiconductors, which semiconductors are a very large weight right now against us. Delete this box, we don't need that. And I will delete that. But one thing we do have to contend with is that we do have this inverse cup built. From the bottom of the inverse cup, we have bullish structure, which we always look for. And potentially this could be a handle because we still have not reached the prior high. It's looking very close, like it's going to, but we are pretty far extended above the upper Bollinger on the 5-minute time frame right now, which means that if we do have a rejection, that can create that inverse handle to the downside because we're still roughly $3 or $4 off the top range. So we'll be watching for that, but also a reason why I don't want to take short positions just yet. QQQ is telling us that there is a short opportunity available. We're seeing descending volume. SPY potentially can be a short opportunity as well. So I want to look at the puts, but I'm assuming that the IV on them is going to be absurd. It's not too bad this morning. It's a little bad, but not too bad. So I'm looking for semis to start pulling down pretty heavily, and then that'll kind of give me the signal I need to short into the SPY. Volatility has been pulling down, still somewhat elevated, but it was up at the 91.83 today. So we're down roughly a whole dollar on that. The calls that I have on ACN, oh geez, I have a bunch of them, so hold on. Let me go ahead and, so I have July 17th, for 2026, I have 130 calls. I also have 150 calls for that same date, but I also have 150 calls for the 18th of September, 2026. So, some short term, some long term. QQQ is very close to closing this smaller cup here. Excuse me. So we'll just mark that range. Now again, I'm not going to be shorting until I see semis start pulling down pretty heavily. Currently right now, they're still buying, and if they continue to buy, then they're going to hit the top of this range and invalidate some of this bearish structure. Volatility still pulling down. So 90.77. We did have a low of 90.70. So I guess pulling up very, very slightly. The HIG is seeing a fair amount of buying within it currently. So I'm very happy just to wait here. Good morning. Any thoughts on Tesla? Yeah, let me take a look at Tesla. But it's gonna have to be fairly quick because I do need to stay looking at these other things. So for Tesla, I have a lot of drawings on this. Now I'm gonna hide the drawings. So this rejection of the daily 5 MA is actually fairly bearish, and it's bearish for a few reasons, right? You see this big red line, that's the daily 200 MA. So that's a, you know, very, very bearish range. We have all of our moving averages below it. We see a rejection of the 5 MA, which is the nearest support. It's being rejected underneath the daily 50 MA, which is also a very key bearish level. Can be bullish if, we're heading to the upside and crossing above it. But our moving averages are starting to position themselves in a way where it's actually extremely bearish. We have the 200 MA above the 50 MA. We have the 5 MA pulling underneath that 50 MA. We have the 10 MA and 20 MA underneath the 50 MA and 200 MA. So this can get fairly bearish, okay? And what I'd be targeting with that bearishness is the 368.60. Very likely going to be going below that. Not today, but overall, very likely going to be heading down towards this, one of these prior support ranges. So Tesla does not look good. Now for semis, we did close that cup. We did hit this resistance, which is very important because that invalidates that potential bearish inverse cup and handle. Instead, this just becomes support buying at this major support. Which on the daily time frame, each time we hit that support, we do see buying to the upside. Now again, kind of the same thesis here is that each time we hit this support, the buyers get weaker usually. May not seem like this because, you know, we had this first round of buying, buyers were very weak, second round of buying, then the buyers kicked in. SPY struggling to close that upward cup. QQQ getting very close. I'm gonna hit 709.80. Top of this range is basically at that 710.08 if I remember correctly. 710.06. So we're going to be patient here. We're not going to take puts just yet. The signal I want to see for puts is I want to see volatility raising, which currently it's at 90.82. And I want to see semiconductors actually selling off. But now we have to contend with that this can potentially be that cup forming a handle to the upside. So even if we do take shorts, we have to be very, very cautious of this structure. We essentially have a whole $32 to the downside from the top of that range that we need to clear to fully invalidate this bullish structure. So that's quite a bit. Good morning, Silver. Let me look at NBIS. Let's see, so the main one is NBIS. Nebius Group, I do have this on my watch list. So we do have a nice double top form there. From that double top, we did hit this very crucial support. Had a little bit of a bounce from that range. Four-hour 20 MA, so that can reject to the downside. In fact, it's been a while since we've tested the 20 MA on the 4-hour time frame. But this is very close towards the bottom. I think you have room in this, but it does concern me that we're so close to the lower Bollinger. And even though the daily time frame isn't showing it, we did pull down and we did hit that support. Last time we hit that support, basically saw buying all the way up towards the 278. So while I'm not expecting that full round of buying, it's very reasonable to see buying all the way back up towards that 244. So I would be a little cautious about that, even though I think the bear case is definitely available. But the main problem for me is that this was done essentially in the overnight / pre-market, which means that on the daily time frame, it's really not going to register as that. Well, there we go, finally did. But this won't count as a lower Bollinger Day 1 unless we see a move all the way below the 184 today. Basically have to close below that and then get the lower Bollinger Day 2. And that would be a, very strong bearish move. So either going to see that massive bounce or we continue downward, hit some of these different supports in here. But again, just have to be very cautious because these prior support tests have given us very large moves to the upside. So I want to look at the SPY again. Semis are still fairly high. They're at 558. So I still don't have the conviction to short into this just yet. We are seeing volatility starting to tick up. Remember, it pulled down all the way to it says 90.54. I missed that. Last time I saw it was at the 90.77 with a low of 90.70. So looks like we did hit that low of 90.54. Currently at 91.18. USO calls are going to be down right now, which is okay. Now, QQQ did get very close to this range to close the cup, but technically it didn't. It's still roughly a whole 30 cents off. Well, no, it did. No, it hit a high of 709.80, so yeah, about 30 cents off. 34 cents, or 36 cents. Excuse me. I got my numbers all mixed up. 26 cents. So 26 cents off the top of that cup, which means that technically this is not a cup yet. Semis are still looking strong. SPY has not pushed to the upper Bollinger on the 15-minute time frame, has pushed to the upper Bollinger on the 5-minute time frame. But I just don't have the conviction to short into this just yet. Not really seeing the signals that I need to see. We're seeing buying out of the HIG. Again, we did pull down all the way to the 79.62. Currently at 79.67. Every penny that is bought into the HIG is really indicative of upside price action. So I'm just not seeing the quality short yet. Morning, Jin. And in fact, semis are starting to look even stronger right now. They were at 558, currently at 559, 560. So I'm gonna look through some of my other trades really quick. American Airlines is slowly recovering. Now I want to check Apple, but I also want to add it to my primary watch list here because I do have shorts on Apple right now. Those are doing okay. Now my Albertsons calls are doing pretty good. They're actually almost back all the way to green, which is really welcoming. Now I want to check HIMS really quick because I do have puts on that. So we potentially have a small cup and handle here. That is a fairly important support. So we'll see how that turns out. We did have a low of the 34.61. Now checking back with SPY. We're still seeing semis pushing upward. So until we see semis really start to weaken, I don't want to be shorting into the SPY. QQQ is looking fairly strong right now as well. The HIG is looking strong. We're seeing volatility pulling downward. Back underneath the 91 again, so it's at 90.95. So I think there's a large potential that we can see this pull up towards the 747 on SPY. Just because we are seeing, quite a large amount of buying out of semiconductors and QQQ. Now I want to look at American Airlines because if we do break the 1650, it's currently at 1661, then we should start shedding a lot of weight, specifically back to that 1331 range. And the cool thing with airlines that I didn't really consider until recently is that when oil rises, that's very, very bearish for airline stocks. So you can take kind of two different trades at the same time. You can go long in oil while shorting airlines, or vice versa if we see the conditions change. For example, if we get another ceasefire or if Iran gets leveled, whatever it is, when oil prices start pulling back down, we then go long in airlines again and should be very profitable. Tesla selling off, yeah, that's what I was kind of worried about. And I think I brought that up, but I want to see Tesla on my main list right now. Let's add this to our SPY list. So if Tesla's selling off, let's see SpaceX. SpaceX is not selling off just yet. Semis are starting to pull down a little bit, but not anywhere to what I'm looking for just yet. We are seeing the ADL starting to falter a little bit. We have a very slight pullback in the HIG, so it's at 79.66. It was at 79.67. I know that may not seem like a lot, but each penny downward actually is very significant. But we're seeing our volatility still sit at this 90.85. So I'm still not seeing the signals that I want to see yet. And the thing about today is that a lot of investors are going to be waiting for the FOMC minutes, which come out at 2 p.m. We might be chopping the entirety of that time. May not. We'll see. So I'm going to go through a couple different lists here because I'm just not very keen on shorting the SPY right now. I think we do have too many conflicting signals, and I don't want to force trades. That's the last thing I want to do right now because we're seeing a lot of buying out of semis still. And again, for context, we were all the way down at the 531. Okay, currently at the 558, pushed all the way to the 563. So roughly $30 to the upside today. We did close this inverse cup. However, looking at this as a resistance range, we do see that from these ranges, if I can properly change the size and color, we do like to have fairly large selling. Okay, so that can happen again. But the second thing that I need to present is that a lot of this selling has been happening in the overnight. Now, what does that mean? That means that, and let me make sure the pre-market's toggled. All the way to there. Okay. And we're going to put this in a dark purple just for a moment. Now, what this is indicative of, and we see this through the volatility, is that these are foreign sellers. Okay, and we know this is true right now. We know that, um, many Asian countries have been having to sell off. We've been seeing South Korea having to sell off tons of equity. We've been seeing Japan having to sell off tons of equity. So a lot of this is selling from, Asia. Now, suddenly we come back to, land of the free, and what happens? Derivatives kick in, and we see lots of buying to the upside. Okay, and this has been holding fairly true over the last, few sessions now, is that each time we get into the overnight, pre-market, generally have a lot of that selling, with the American markets trying to buy it up. So we might just have to wait until the overnight again to see the continuation in the selling. Not entirely saying that's the case though. We definitely can be seeing the selling during the session today. But I'm not seeing the signals of that so far. Now, I do want to look at some of my other trades really quick. So the USO calls finally green, that's good. ACN still holding weight. ECI doing good. American Airlines doing good. Now I want to look at my list that I made on Sunday night, or Monday night, excuse me. Yesterday I was going to stream, but I had a doctor appointment fairly early in the morning, and that made it so I couldn't take a lot of the positions that I wanted to take. One of these was Lemonade, and I wanted to take a short position in that. Um, when we were at the 81 basically yesterday is when I had my appointment, so I couldn't take the short position that I wanted. But I did want to take the short down to the 63, okay, because that'd be above the 20 mil, and we have plenty of room to the downside here. So that short position ran from all the way, hold on, it's not showing today. Ran all the way from the $1.19 to currently being $2.25. So that's a little frustrating. Been having a lot of those type of positions lately where I fully plan on entering them, and then life gets in the way and then I don't. Our Apple puts still doing fine. Now we are starting to see a pull down in semis a little bit. They did hit the 556. Volatility, however, is at the 90.87. Right now, we're just waiting. We really don't have a clear signal on one side or the other just yet. Reason why I'm saying that is because it's not like we're seeing the HIG buying to the upside, but we're not really seeing it sell off either. It's just kind of holding its weight. Volatility was at the 91.83, pulled down to the 90.54, currently at the 91.12, so that is suggesting a little bit of selling is getting ready to prepare, but if we're going to see that, I want to see this pushing a lot further. Semiconductors did close this cup here, which is bullish overall. But from the top of that cup, that can create a handle to the downside. But with the handle to the downside, that means we have to go down roughly a whole additional $24 to invalidate that cup, which can happen. Not going to say this, that it can't. Volatility is starting to pick up, so it's at 91.57. The HIG really hasn't been selling too much though. It's currently at 79.56. Volatility is still picking up, so that's a very good signal. Now, today might be one of those sessions where we see this riding the lower Bollinger for a long time today. But currently we are very close to the lower Bollinger on the 5-minute time frame, which means that usually that's when you take calls. No, I'm not taking calls there, but just from a mean reversion standpoint, it's not really the quality entry that I'm looking for puts either. I think it's just kind of dangerous to take puts in this range because we have a very large potential of having that upside bounce occur pretty much at any moment. So on days where I don't see a very clear entry, I'm just not going to force trades. Now, technically, you could 0 DTE USO, which I do think is actually fairly ideal. I have contracts for Friday. I have the 114 calls, but I do think that there's a potential to 0 DTE all the way to the 113 today. Very likely closing this top gap right here. Would require a fair amount of movement, but I do think that with the conflict kind of reigniting, the potential of that is super, super large. In fact, I'm going to look at some of those calls. Basically $58, give or take. Now, it's not really at my range to take those calls. I did take the earlier calls a lot closer to the bottom of the day. But it doesn't mean that it's a bad position to take at this point either. I do see the case of just continuing to push for the majority of the day and those calls running into the money. Starting to see some selling of the SPY. Semi is seeing some selling, but not really a ton of selling just yet. Might seem like, oh, it's basically $10 to the downside so far. Semiconductors, excuse me, have been basically moving $30 a day for the last like few weeks now. So $10 to the downside doesn't mean a whole lot just yet. Volatility is at a new high of the day, so it's at 92, which is a very bearish signal. The HIG is still not selling off like I want to see it. It's currently at the 79.64, so it's only lost 2 cents since the top of the SPY and everything today. I wish I grabbed those USO calls when I said I would, because they went from 55 to 80. So that would have been a nice trade, but it is what it is. Apple starting to buy back a little bit. USO is almost at that 113 already, so congratulations if anybody took those calls. You're up a lot. These semis did pull down to the 553, currently back to the 557, 558 range, where SPY pulled down to the 742.64 and now already back up to the 743.50. So I really don't like this price action. I think it's far too wishy-washy right now. looking for very, very clear conviction to either short or go long. So far, I'm not really seeing either out of the market just yet. So very likely this is going to be a chop day. Because again, we do have the FOMC minutes at 2 p.m. So traders might just be waiting for that point to really tack on positions. So if anybody grabbed those 0DT USO calls, I want to know because they're absolutely blasting off for you right now. I got the ones that were, for Friday, which are up quite a bit. They're up, $133, which also means that American Airlines should be getting kind of wrecked right now, which is something I'm happy with because I am short in this. So those positions are doing well. But with the main indices, I'm just really not seeing the signals I want to see just yet. HIG is down to the 79.62. Excuse me, I keep yawning today. It's driving me crazy. But you see, even if we shorted from the very top of today, you basically would have gotten chopped up a little bit. There was this opportunity at the 744.70 to take that to the 742.66 if you were very, very precise about that exit. That would have been on the 1 minute time frame from the upper Bollinger to the lower Bollinger. But if you're still holding those short positions, then you're kind of not doing good right now. So not the price action I'm looking for to take 0DTs on this just yet. These USO calls are absolutely blasting right now. Semis pulling back up. So again, we did create this cup, potentially forming the handle. So this could be pushing to the upside quite a bit today. Volatility starting to drop fairly sharply. It's at 91.62. Again, it was all the way up at the 92. HIG starting to buy back up again, so 79.65. So just not a lot of great signals in terms of one way or the other. Again, today might be a very choppy day until we actually see the FOMC minutes come out, which that's going to be quite a while from now. Basically 3 hours and, 37 minutes away. And I wish I could stop yawning. My ACN position is slowly recovering weight. Which I don't really worry about that position in terms of the rest of the market. The rest of the market can be having a sell-off while ACN will be green. Um, it's a company based out of Ireland, so I don't think it's in the main indices at all. So I'm not really worried about that. Feels like there's a ton of buyer hesitation, but at the same time, there's a ton of seller hesitation. So it's kind of like both sides are just having a little bit of a tug of war right now. Uh, I want to look at Nimbus Group again. Yeah, that's what I was worried about. Them having that major bounce to the upside. So I don't think silver's still in here, but if you are, just be really careful with this one. Yoso doing super well. And basically I'm expecting a really slow choppy day. So if there's any stocks anybody wants to look at, I'll be happy to do so. Now I want to look at some of these other positions that I've been looking at. The ACI calls are almost fully green again, which is super good. These USO calls are up 160. I want to look at those other USO calls that I was looking at just to see how much they are now. Because I was looking at those 113 0 DTEs. Yeah, so I called them out at 0.55 and they're currently 134, 142, excuse me. So that would have been a great trade. What a bummer. But it's all good. Volatility is at 92.32, so it is pulling up to a new high of the day. We have the HIG at 79.63, which to me this still shows hesitation from the seller standpoint. Equity sellers are not really, um, you know, directly selling equities just yet. Now my FXY position is down slightly, and that's basically going long in the yen. With the oil conflict starting back up, the Bank of Japan once again kind of has to postpone everything. Same with my TLT position. That's taking a long position in the 20-year bonds. Currently down in that a little bit. Can we look at GLW and Apple? Absolutely. So let's see. I want to look at the moving averages on the daily. We do have the second bearish cross here, which I'm not really looking at the price target here, but looking at the actual moving averages, we see the 5 MA crossing underneath the 10 MA, 5 MA also crossing underneath the 20 MA, so that's the first bullish cross, or bearish cross, excuse me, and then the second bearish cross. And now the current price is underneath the 50 MA, okay, which is telling us that very likely we're going to be seeing that 5 MA pulling underneath the 50 MA as well. The next step to this is to get the 10 MA and 20 MA underneath that level, but to also have the 10 MA cross underneath the 20 MA, and that's going to take a few days. That could take, anywhere from 5 to 6 days from now to really do, assuming we continue pulling downward. But you do have some crucial supports that do look very good. Basically at this 172-ish range right here, there's one support. And the second that I'd be targeting is basically that 164. So you do have downside. You do have the 5 MA rejection. I want to look at the hourly for a moment. So it looks like there was a 5 MA test done on 702, which means that the market is somewhat starting to be due for a 5 MA retest. Now the 5 MA is currently at the 196. If we were to have that test today, you'd be expecting a pull upward basically all the way to the 198. I don't really expect that. I do expect the 5 MA to pull down even further tomorrow, and then if this price holds the same range, then you have that retest before pushing down even further. But this is starting to look fairly bearish, okay? You did have the bearish accumulation up at the top, above the upper Bollinger on the daily time frame, which that's exactly when you short day 2 upper Bollinger. From that short position, you're hitting plenty of really, really important targets. This has been sitting above the 50-day moving average for quite some time, majority of this year actually, and we just now finally broke that as of yesterday. So this is very, very bearish. This is telling you that buyers are starting to see some real hesitation here. So I would definitely be looking for this 172 support range. The reason why you look for that is because last time you hit that range, you did have a very large push upward. Very likely the market's going to be attracted to that push upward. And you see another push from there. Even if it gives you a lower high, might give you a higher high. But I do think that's a very strong range to be looking for. So that is GLW. Now for Apple, I'm currently shorting Apple because as a mean reversion trader, I always target the day 2 upper Bollinger if I see the higher high come through. And from that range, I target towards the 20 MA. So that's what I'm looking for currently. Now we can absolutely pull back up to the, I think it's 100 or 317.40. But just from my current rules and everything, this is exactly what I'm wanting to short into. Now I'm targeting the 20 MA, which is currently at the 295. Again, I have 290 put. But potentially we could be heading down all the way towards this 273, 274 range. So that would be super ideal. Now SPY starting to sell a little bit, but even then it's not really super convincing. Let's look at the 1 minute time frame. You see how choppy this structure is? It's just constant up, down, up, down, up, down, up, down, up, down, showing a lot of hesitation. But we are seeing lower highs from that hesitation. And technically, lower lows, which does kind of bring us to this point where we can start to close some inverse cups, form a handle, continue downward. So that's kind of what I talked about this morning that I'm looking for on the SPY is basically I want to pull down, close that inverse cup, see the push back upward, and from that push upward, whenever we decide the top is in, then I'll take the really big short to the downside. Because at that point, the sellers would be very, very convicted to, not have so much chop going on. But with this chop, this is going to be absolutely hosing positions where, you basically have to be super, super quick with your entries and exits. Volatility is pulling up though. It's at 92.95, which is a very good signal. And the HIG is pulling down quite a bit, so it's at 79.59. So a lot of selling signals are there. So potentially you could short this and do very well right now. But on the 5 minute time frame, we are at the lower Bollinger. That's usually not when I take short positions. Usually that's when I take calls. So I'm going to wait until we get a push upward again. I don't think you can move open positions into another account. You can move shares. Now, if you call Webull, I'm pretty sure they can move the options over. but I don't think you have the ability to do so on your end. What do you think about plug in the next week? I'm super skeptical about it right now, honestly. We've been looking for this cup and handle, but this handle has just been continuously breaking down and not giving us a real reprieve. We have one lower Bollinger move on the daily time frame. Now we're at the second lower Bollinger move. So potentially, um, not for next week, but taking, I don't know why I made a second box, but taking the 2.5 straight calls for maybe a month out would be very ideal. But that's something you do tomorrow when you get the lower low of the day two bottom Bollinger. Not something you do today. So with that, it is looking like we are going to close this inverse cup, which does not invalidate the larger bullish cup just yet. We would need to pull down basically all the way to the 178 or 17, I can't talk, 171.8. So we'd have to pull down quite a bit to invalidate this bullish structure. But it has not created the handle like I thought it would at this range. Instead, we've continued to trend downward, which again, that's not very ideal. And coming into next week, it's not looking like a very promising position. So let's see, I messed up still holding USO puts. So you're not messing up by doing that, okay? Because I'm still holding those puts for September. However, you definitely should have gotten some of those calls that we talked about. Um, with that said, these are very short-term calls. I don't know if I could see on your screen. These are very short-term calls. Okay. These calls again are for this Friday, and we'll basically be doing this on a week-by-week basis. Is that if we see the conflict still ongoing, if we see room above us, then we'll take those calls to that range. Rinse, repeat, um, until one, either we fully out profit the puts, or two, we do get our ceasefire again, we do get a resolution to the conflict, and then we can add more into those puts, um, which is kind of what I'm fully expecting to do. I'm writing the short-term call upside, planning to really engage onto further puts when the time comes, but I have no problem holding these puts currently because, you know, we potentially could end this conflict at any moment. Doesn't seem like it, but with how the White House handles things, we've seen those type of deals and everything struck very immediately, so yeah, you're very welcome. Volatility is still rising, so at 93.36. So if you were able to take a short position up here, I didn't. Okay, I had a lot of hesitation in taking those shorts today. But if you were able to take that short position up at the top today, then you should be able to hold at least until that 740, 50-ish range. Potentially even heading down to the 739.45. But I don't want to chase any positions into this. Perfectly fine with just waiting until I see a quality opportunity. want to look at American Airlines because it is starting to melt very nicely. And I'm really glad we sold our drip positions in terms of the calls last week. Um, at least if you guys were watching the stream and everything, I made it very clear that that's what I was going to do. Um, because now with this oil conflict starting back up, those positions would be in red. Now I'm still holding my equities. I'm completely fine doing that. I think you can see a little reprieve on that call, potentially, just because we are at the lower Bollinger. Um, but that doesn't mean a whole lot right now. I do think that the selling is very likely going to ride against this lower Bollinger for a majority of the session. Semis hit their 5-minute 20 mile. QQQ still has some room to the downside here. So it's like, as much as I want to say, yeah, try to wait for some upside reprieve before you sell that call, um, it might just be safer just to cut your losses on that position. Yeah, you're very welcome. Volatility is still rising, almost at that 94. It's currently at 93.70. We'll tick down slightly, so 93.67. We still have the HIG at the 79.58. And while I do think there's a high likelihood we're going to pull down to the 739, I still want to just wait on the position. I think it's very smart being in the SPY puts right now. Now I want to look at TLT. I'm going to hide the drawing so it doesn't look like a mess. So on the daily, we're not at the lower Bollinger yet. I mean, we're at the lower Bollinger, but we're not breaching it just yet. So I will be looking for the lower Bollinger day 2 to take additional calls for September or December, whatever strike I have. Whatever one this is. Now, I think these puts are very quality all the way down to basically that lower 740 to 739 range. There's two different ranges that I'm kind of looking for here. Is that you can pull to, let me get a horizontal ray. Can pull to basically that 740, 86, slightly below that, but can pull to that range, and that range would give us this cup close. And from that, what I'm looking for is the pullback upward towards the 742, 743. Form that handle slash the head and shoulders, and then short downward because potentially we could have a really large selling day. So that's kind of what I'm looking for to enter. I'm either looking for the 79.38 or 739.38 or this 740.50 range, because both of those ranges can kind of do that. What I'll also be looking for too is for, let me get horizontal line. I'll be looking for the upper Bollinger to curve downward while seeing the 20 MA curving downward. And then likely either I'll take the position at the 20 MA or we do get lucky enough to pull up to the upper Bollinger, something like that, and then short downward. Volatility is very, very elevated right now though. It's at 94.01. Semis are still holding fairly strong. They're at 553.57. And just for reference, when the SPY was at this low of the morning, semiconductors were basically at the 531. So it's a little disjointed in there. Just a very choppy session, even though I do think the price action is trying to lead to a downside sell. I just want to be very cautious about when I take that position. Now, if we were to pull back up towards the 20 MA, which is the 743.32, I might be inclined to take a couple puts there. The ADL on the day has been dropping ever since this morning, which is a, very good signal for the puts. HIG has been dropping quite a bit. It was all the way up to the 79.68 today, currently at the 79.56, so down a whole 12 cents, which doesn't seem like a lot, but for the HIG, that's very, very massive. So again, if we can pull up to the 743.25, then I will try to engage in some cheap puts. I think we talked about Tesla looking terrible today. Tesla has been basically selling off all morning. So it looks like ACN is doing a 5 mile retest. Which overall that is bullish, even if it's red currently. Oh, finally my real puts are doing work. We're gonna cut those suckers because shorting that has been a nightmare. I'll happily sell those with the small profit on that. Cool. Okay. I'm gonna go say bye to my daughter really quick, because she has school, so give me like 5 minutes, everybody, and I'll be right back. Sorry about that, I'm back, everybody. So let me see my Yoso position. It's doing nice. Still waiting on ACN to pick back up. Volatility is still elevated. It's at 94.51. Hig pulling back upward though. This is kind of concerning for the put positions. What do I think about FOMC? Well, today's just going to be the meeting minutes. So the meeting minutes are just going over which what all the Fed governors covered in the last FOMC meeting. So last FOMC meeting, I believe we had um, half the members wanting to do a rate hike. So it'll be interesting to read, but it's not going to be the same as, the actual FOMC. It's not like we have, the Fed chair Warsh speaking or anything else. It's just releasing the notes basically about the decisions they made for that meeting and why they made those. So I don't have much to say about it. I'm not really sure what they're gonna say in their meeting notes. But I do think that the market will want to see that just because the Fed is, they've really shifted stance from being very front facing with their data to now they're going to react to what the market provides them. So with them being more of in a reactionary stance, that means that um, what they have to say behind closed doors is, very, very significant. So I think that's why there's a lot of hesitation right now from both the buying and selling side. Yes, we're seeing some selling, but it's nothing to write home about yet. Um, so I am just interested to see what the FOMC participants had to say about their last meeting. I think it definitely could affect the market today, um, especially because the Fed has completely flip-flopped their stance from, basically being the ones to provoke the reaction out of the market to now being the ones reacting to what the market's providing. Um, I think it could be very, very significant on the market. Probably much more significant than the FOMC minutes have been in quite a long time. It's kind of like when Powell was chair. We sort of knew almost exactly what the Fed would do. Um, just based through the CME, Fed futures, um, based through the statements and commentary that Powell would make. There wasn't even a huge need to even read the meeting minutes because, we already knew basically what everybody was doing. Now, that's not so much the case. But I do kind of expect a lot of chop to occur prior to the FOMC meeting minutes coming out. So we still have quite a while on that as well. Basically 2 hours and 47 minutes. So hopefully, and what I'm really hoping for, is that we will see some buying towards the 20 ma slash upside so that we can secure that right shoulder on this head and shoulders. This would be a very, very opportune entry on those puts, and then take those puts down to, at the very least, the 739.38. But I do think that, there's a very large potential we could head down quite a bit today. Do I think we're going to head down all the way to the 732? Probably not. That'd be a very extreme day for SPY. We've seen that happen, but I don't think that's in the cards just yet. But if we get our bear structure that we're looking for here, then that's telling us that we do have the liquidity to do so. I usually don't get 1DT options on SPY, but this might be the type of day where I do so. Now semis are starting to sell off a little bit. They're at 551.47. Last time I checked, they were at 553. The HIG is still somewhat holding the same levels that it's been. It's currently at 79.57. Volatility is still climbing upward, so 94.74. So a lot of good selling signals. I definitely think that we kind of have the ability to sell down all the way to the 739 right now, fairly easily. But I want to be very patient with my position today, especially if I'm going to get a 1DTE, because the goal of that would be to capture this 732. So that's kind of the overall goal of what I'm trying to accomplish today. And I really don't think that the selling is going to end, even if we have a little bit of buying here and there during the 0DT sessions. But a lot of this structure is telling me that we're getting ready to sell. Again, we've been seeing continued weakness within our buyers. We had very strong buyers during June, all the way to about the beginning of, no, I have that messed up. From May to June, and then June we started to see some selling, a little bit of buying again, but they could not even secure that previous level. Selling down to a new low. Hold on, people calling me. Literally 8 o'clock in the morning. Selling down to that level, pulling back up, and not even hitting the resistance line again, which has created this very solid and strong selling channel. This selling channel is basically telling us that we're going to be going down to this next support. Well, this next support's all the way at the 706.55. So we have a lot of room to lose on the SPY. Now, can this turn back into buying? Absolutely. But I do think that's going to be more narrative driven rather than the algorithms kicking in and buying upward. For me with the USO, I'm I'm completely fine with just holding my puts. It might seem like a silly idea to hold puts when we're expecting upward price action. Um, but we're kind of in a position right now, and it may not seem like it in the current moment, but we're in a position right now where at any second, um, we could get some sort of peace deal. Something can occur to where our puts become worth value again. Now, some might make the case that, well, why not just cut the puts and buy them back when we do get the peace deal? Um, I think that's perfectly reasonable. It's just not something I'm really interested in right now. I'd rather just take short-term calls, write those up against that, and continue taking profits off of those calls as we either continue riding upward or eventually get our ceasefire deal and head downward. Now, in terms of why do we take 0 DT positions instead of 1 DT positions, um, generally if I was going to take 1 DT positions, I would still trade them as if they were 0 DT. So, for example, if I took positions for tomorrow, um, not what I'm wanting to do today. Okay, I'm wanting to take positions for tomorrow and actually let them sit for tomorrow. It's very rare that I do that on SPY. But if I was to take 1DT just to have less chop within the contract, then I would still usually trade that as a 0DT and still try to profit off of, these moves downward and everything else. The minutes is highlighted in red on trading economics. Yeah, I think that's very likely what's going to happen. Okay, that's great. If you have the August 14th calls, then those are fine. Just continue to hold those, and basically you hold those all the way until we actually get a ceasefire agreement. And then you put those profits back into puts if you want to, have that further put exposure. Now, semis are still pulling down, even though we're seeing SPY have a little bit of a bounce. Semis are currently at the 549.07. Volatility has pulled down slightly. It was at the 94.70 something, currently at the 94.63. But basically, I want to see this right shoulder complete um, before I take my put position today. It was either taking it at the top here, which I was very hesitant to do because we were seeing a lot of mixed signals, or I'm going to wait for this right shoulder. And we talked about that far before we even saw this downside price action. So if we get our upside buying, that's when I'll take some puts. If not, if we just continue selling downward, then I'm very okay with just waiting until the next session. The thing I try to do with my contracts, which, we're not always going to be able to do that, but I try to really time as perfect as possible of an entry. Okay. Based on my rules, I like mean reversion trades, meaning I like to see the market either pushing above the upper Bollinger or below the lower Bollinger. Um, if it's pushed above the upper Bollinger, that's when I take puts. If it's pushed below the lower Bollinger, that's when I take calls. Now, with that said, when we were trading at this range today, we had a ton of hesitation from both the buyers and the sellers. Even though we talked about that descending range within the buying, there was still enough conviction from the buyers within semiconductors that it looked like they were going to complete this cup and handle to the upside. They could still do that. Um, again, we do have to pull down all the way to, what is this, the 531 to invalidate this bullish cup. But with that structure being there, and when we started seeing that pulling upward at basically the exact same time, we started pulling up on the SPY. That created this structure to where we could start seeing a small cup and handle form. And that cup and handle would have taken us back up to the 747. So even though we were within my range of the mean reversion trade, it doesn't mean that it was a great entry um, overall. In hindsight, of course it was a great entry, but at the moment, it still could have turned to major upside. We were seeing the HIG holding strong. We were seeing volatility still elevated, but it pulled down all the way from the 91.70 to the, I think it was 90.50. Yeah, 90.54. So my conviction to take puts at that point was not very strong. And that's okay. We don't have to nail every single trade. We don't have to take every single trade. Every single day doesn't have to be a day where you engage into 0 DTEs. And I think that's smart too, Jen. Um, Taking some longer dated positions. Now the thing about that is that it's kind of like a double-edged sword, is that you get less volatility within the contract, but that means also less profit on correct moves. So if you have very high conviction in a trade, and usually that's what I'm trying to look for. I look for trades that I have high conviction in. Then I want to be able to squeeze every penny out of it that I can. Um, Whether that's greedy or not, it doesn't really matter. Sometimes you have to really turn on the greed to get some nice wins going. But it's kind of like today. If we pull down, then head back upward, and we do create this right shoulder that I'm looking for, that's going to give me a ton of conviction to take not just 1 DTs, but also 0 DTs, because very likely we're going to head down quite substantially from that range. Now we are very close to this 739.38, so we should be expecting a bounce very, very soon. Basically, that range is a really quality support range. So from that range, I am expecting to pull upward towards that 20 mile. 20 mile currently being at the 742.40. Basically just waiting at this point. Now, I think there is a case of taking a call here to that 742, but I do want to see the 739.38 or lower hit first. Volatility is pulling up even higher. It's currently at 95.52. The HIG is still holding that 79.57 range, which out of anything, that's very concerning. Because again, HIG is kind of like that upper echelon of equity risk. If we're seeing that holding somewhat strong, then usually that's going to allude to choppy price action or buying. Now, I do need to leave in about 30 minutes because I do have a super important phone call that I'm waiting for today. Um, Basically scheduled this like 6 months ago. And it can happen between my time anywhere from 9 a.m. to 11 a.m. So between that time frame, I have to expect a phone call. So basically 30 minutes from now, I'm going to have to cut out of the stream, unfortunately. Tomorrow should be a longer stream though. Now again, I am looking for this push down to the 739.38. From that range, I am going to try to engage in a call. I do expect it to kind of push underneath that level a little bit. Very likely I'll probably target the 741 calls, depending on the price. But the call premiums should be down a lot right now, so let me take a look. They're still a little expensive, but when we hit that level, it should be probably about $90 per call, so I think that's fair. But I also think the 742s could be a fine choice as well, and those will probably be closer to about 60, 62, give or take. So we'll see if we get our level. But yeah, if there is any final questions for today, I'm going to be here like another 28 minutes. So if you want me to go over any symbols or anything, I'll be more than happy to do so. But until then, we're either waiting for our push to the downside to take calls, or we're going to push to the 20 mile and I will take some puts. The USO calls still doing very nicely. I really wish I got those 0 DTs I talked about because they would be basically in the money by a whole $1.36 roughly. So that would have been super quality trade, or a super quality trade, excuse me, let me talk correctly. My ACN position is slowly clawing its way back. Volatility did pull all the way up to 96.01. I guess that happened either when I was saying bye to my daughter or I just missed the pop. But it did pull up to 96.01. So again, for the low of today, we were at 90.54, so roughly a whole $5.50 upside already. Now, very likely soon here, probably starting next week, I'm going to resume doing the daily videos going over like the SPY and my expectations and everything. That way each day we can kind of just be prepared for, what's coming the next day. Seeing semis buying upward, we're seeing the HIG pulling up very slightly. My American airline puts are almost fully green. My 17 puts are doing fine. They're up 231%, which is awesome. But my 15 strike puts do need a little work. They're still down roughly 44%. So waiting for that to recover. I'll try to remember to call you Mike. I know that we have the other Mike in chat, so in chat I'll call you Jin, but on the stream I'll call you Mike. Oh, so Justin, you're a longtime viewer. Cool. Yeah, I look forward to doing those videos again. And they're probably just going to be very short, like 10, 15-minute videos, unless I, you know, really see a lot to talk about that day. But just going over the expectations, support levels, resistance levels, things like that. Just a really nice type video to prepare for the next trading session. I'm also trying to get a camera too, to where I can, you know, actually just stream and show my face. But I want to get like a camera with a whiteboard where I can, write notes down, where you guys can see those notes and everything, all that good stuff. Oh, that makes sense. I want to look at the dollar here. I'm gonna delete these boxes because they're not gonna mean anything to anybody. But I want to look at the weekly time frame. That's what I think everybody's forgetting here. Is that on the weekly time frame, pushing into these upper Bollingers usually causes large reactions to the downside. So we did push all the way to the, what is it? 101.76. Especially with this conflict starting back up, it's surprising that the dollar is not just going on a tear right now. And the reason why I say that is because we see the reaction out of oil. Okay, and so far it's a pretty large reaction. We've gone from that 102 all the way up to currently the 114.45. However, with the dollar, this is showing hesitation. Okay, and the reason why it's showing hesitation is because if oil prices are going to stay elevated, then that means that um, we're going to be having higher yields. Out of higher yields, that's kind of somewhat of a measure of what the dollar should be reflecting, meaning higher borrowing conditions, higher lending conditions, um, higher just dollar cost. But we're not seeing that full reaction out of the dollar yet. We're seeing it a little bit, but we should really be seeing the dollar kind of ripping right now, which we're not. Not really a concern or anything. Um, just something I want to keep in the back of my mind, and I actually just want to write that down too. So that's not standard. Okay, usually we'd be seeing the dollar heading a lot higher than what we're currently seeing it, especially on the, um, the ceasefire basically was terminated either yesterday or today or last night. Sometime between the 2 days, the ceasefire was terminated. Okay, and that's a big deal. We're seeing this reaction from the treasuries a little bit, which let's just turn off the drawing so that we can see. But treasuries do not like war. And ever since the war, apologize for all this, but ever since the war, we've been seeing, selling, major consolidating, selling, major consolidating, back to selling. Still see some bullish structure in here, but that's not going to stay valid if we stay in this conflict for too long. So we pulled down to a low of 739.51. Again, I still really want to see that 739.38. Or I want to pull upward to basically the upper bowl, or not the upper Bollinger, but the 20 MA, which is currently at the 741.93. Now, what might happen is you see how there's that little bit of chop in that range right there? We might get something very reflective of that, okay, as we near FOMC, which is in 2 hours and 16 minutes. Well, 2 hours and 15 minutes and 3, 2, 1. Okay, 2 hours and 15 minutes. Aside from that, I do expect that push back to the upside to create that right shoulder. But this right shoulder doesn't have to be very large either. So while I do have this set up way up here, technically this prior left shoulder was all the way down there, and it wasn't very large either. So basically we could be seeing something like that to create that right shoulder, which means that we could have already topped in here prior to heading down. And if that's the case, then I just want to be super patient and wait on positions. Again, I don't want to force anything in here. If we're going to have a major sell downward, the structure will build towards that. But with that chop that I was talking about in that left shoulder, is that if we see that towards the right shoulder, then what's going to happen is that the upper Bollinger is going to head downward. From that upper Bollinger heading downward, that creates the ability for the market to push all the way up into that upper Bollinger, create that mean reversion trade, where we then short that range, and then potentially give us a very large sell down on the day. Now, one thing that I do want to mark out really quick, because I am going to be leaving in about 13 minutes. Fortunately, I basically have to leave on the dot today. But I want to show these really quick. So I want to put the call wall and the put wall up. So let's see, we have a put wall at 740. That makes a lot of sense. So we'll put this over here and I'll edit it in a second. Call wall, we have at literally the 745. Put wall at the 740. I'll make these thinner so they're not so annoying. And we will put this one underneath. Okay, so we got that labeled, but I also want to see where the max pain is for today. So give me 1 second while I get this loaded. So the max pain is at the 747, which no chance. No chance that's gonna happen unless the meeting minutes creates a bullish reaction from the market. So we're gonna make this a very thin line. And we're going to put this as dark red. Let me label that as white so we can actually see it. Alright, so that's kind of our levels on the day, which means that from a market maker standpoint, we want to close right in that area. Essentially. And the reason why we want to do that is because we want to reject the call wall because that's where all the calls were sold at. And we want to reject the put wall because that's where all the puts were sold at. So very likely that's the goal of the day. But structurally, I think that we can break below this put wall. Okay. I don't think this is the day where they're going to basically just sell butterflies and sell out these two ranges and chop in between. It's not really what I'm seeing. But it's something to keep in mind is that with the put wall being at that 740, with the call wall being at that 745, look exactly where we rejected today if I could talk properly. It's hard being a human sometimes. Talking is hard. But look exactly where we rejected today. We rejected right at that 744.91, basically right below that call wall. And then we went slightly below the put wall and shot right past it. Okay, so that's 739.51. So I think these are very valid levels to be concerned about right now. However, I think that if we get our right shoulder building in here, we should be able to break below that put wall. Okay. Especially with volatility starting to rise as heavily as it is. And if we continue seeing the HIG losing its levels, then that's telling us that dealers are preparing to sell. So again, the reason why I monitor the VVIX instead of the actual VIX is this is the volatility futures. It measures the volatility within the VIX. Okay, so when actual contracts are being written, when actual insurance is being written against equities, this is the instrument that goes up. The actual VIX only goes up or down based off of derivatives based on the SPACs itself. So it's a little different. But the difference is that retail can target those SPACs contracts. Large institutions can target those SPACs contracts. Usually, VVIX is going to be purely from the dealer standpoint, like very big banks, very big money. Sometimes it could be institutions, but it's usually going to be very big institutions. So when we see this move, this holds a lot of weight. When we see the HIG selling, this means that, again, the HIG is based off of the high yield corporate bonds, aka junk bonds. I don't know why they call them junk bonds, but they're called junk bonds because they're not US Treasuries. Basically, they're not backed guaranteed. It's not guaranteed money. Because any of these institutions can fail, which can cause the junk bonds to, fail in tandem. But this is still the top echelon of equity risk. So it's like if you're going to be buying into semis, Um, the way to be doing that the safer way would be to buy into high yield corporate bonds. So when we see the high yield corporate bonds sell, usually equities try to follow. So I'm looking for those signals today, is basically what I'm trying to say in a long convoluted way. Is that I really want to see the HIG falling if we're going to be selling. And the VVIX has been rising today, which means that dealers are hedging their equities. Now, if they're hedging their equities, would they be doing that to sell butterflies? Very likely not. Okay, extremely likely not. This is not the type of move where you need to hedge equities into because, you're basically going to be sitting at that same range. You hedge equities if you're going to be breaking ground. Okay, so I do think that today is going to be a fairly large selling day, if we can get the levels that we need. These USO calls are doing insanely well. I really wish I got those 0DT calls like I wanted. Kind of kicking myself over that one, but it is what it is. I've actually been making a lot of money off of USO lately in terms of both shorting it short term and taking calls short term. Actually pays really well to trade this, and you can 0DT trade USO as well. So that might be something we start doing a lot more of. Especially while there is, this oil conflict going on. Starting to see a small inverse cup forming here. Let's see the 1 minute time frame. Failed to form the cup. Should really try to aim down towards that 730-ish. And then pull back up. Very likely what's going to occur here. But we're seeing our upper Bollinger pulling down, like I talked about. So if we're getting the same type of chop that we're seeing within this left shoulder, if we get the same chop here, I'll continue pulling the upper Bollinger downward, which potentially gives us that range to be able to grab into the upper Bollinger, grab that liquidity, and then head downward. Alright, so I do need to leave in 2 minutes because again, I have a really important phone call that I've scheduled like 6 months ago that I need to take today. So if there's any final questions, now's a really good time because I will have to leave on the dot today. Yeah, you're very welcome. I'm very happy to do these streams for everybody. And hopefully my nonsensical babble makes sense. But I will be streaming tomorrow, and for those that do join the classes, I will be doing a class tonight. If anyone's interested in joining those, I do charge $29.99 a month. Um, it's currently over 9 hours of class material, and each week we're just continuing to add to it. So if you're looking to kind of upgrade your trading knowledge or whatever, um, then I'll look forward to seeing you there. I enjoy doing those classes with everybody, so. But with that said, um, I hope everyone has a very, very, very great day, and I will see you all tomorrow morning if I don't see you tonight. So have a good day, everybody. Thanks for stopping by, and best of luck with your trades. Again, I am looking for this right shoulder to form. If we get that right shoulder, I will be shorting down into it. Even if I am going to be on an important phone call, uh, still going to be watching this like a hawk. So have a great day, everybody. Thank you so much for watching, and I'll talk to you tomorrow morning. Take care.